Morning, guys. Happy Friday. It's September 19th, 5:34 a.m. Central Time. Grain markets are mixed this morning. Brian Split is here wearing a very nice flannel shirt. Non-offensive flannel shirt, might I say.
No, there's no words on it.
I'm not wearing a hat today, which is should be big news. First time in like a year.
Dude, your hair looks great.
So my dad doesn't wear jeans because he says that if he wears, or my dad doesn't wear shorts. He wears jeans only, even if it's 1,000 degrees. And he says,
Does he wear jean shorts?
No. He says that he can't wear shorts because the women will just flock to him, and it's annoying. And it's for that same reason that I wear a hat all the time, because my hair is just so fantastic. Like, I won the hair lottery. I've got thick hair. I've got no gray hair. I'm not bald.
What do you got? What's wrong with gray hair?
I mean, nothing. Personal preference, I guess. But if I didn't wear a hat, if I went on here every day without a hat, like the show would just turn into just women commenting constantly.
Yeah, definitely.
Can you imagine?
All right. We've got some China ship stuff we'll start with today.
Alrighty. So the U.S. will soon impose fees for Chinese-built and Chinese-operated ships docking at U.S. ports. The new rule from the U.S. Trade Representative aims to curb China's dominance in shipping and shipbuilding. Vessels both built in China and operated by Chinese companies will face the highest fees, while those built in China but operated by foreign companies will be subject to lower charges. The fees will take effect on October 14th and are scheduled to rise gradually in the coming years. With strong bipartisan support for boosting U.S. shipbuilding, the policy is expected to remain in place long term.
Brian, you probably already know this, but this was kind of settled as it relates to grain shipments, but it's been in the news a lot, and I've seen a lot of people talking about it, so I figured we address it. Farm Bureau had a couple of really great slides back in like March when this was a big topic, and yeah, a ton of ships are built in China, and it's something that is a big deal. What happened, I think, in April was that the lobbies all kicked back, like the farm lobbies, the grain exporter lobbies, they all kicked back and they really eased up on this stuff. So the way that this is going to work is that the big bulk carriers that largely ship corn, soybeans, they're the big workhorses, like these Panamax vessels.
Yeah, your Panamax vessels, right?
They're going to be exempt. Anything under 80,000 dead tonnage weights is going to be exempt if it's a bulk carrier. So that covers 75 to 80% of grain shipments out of the United States, I believe. So for those of you guys who are worried about this, and I've had a lot of like texts and emails, and we've had the comments, Joe, this October 14th shipping thing is coming. It looks to be a non-issue to me. Have you heard otherwise?
No, I have not heard otherwise. It seems like they did carve out, that specification so that it does not affect grain trade specifically. And, it's maybe just one of those things where it's something to be negotiated. It's a negotiation point here for, ongoing talks between the U.S. and China, which we'll have a conference call today, right?
A Panamax vessel looks like this, in case you guys didn't know. I think that's a Panamax vessel. I'm no expert, but it's a big bulk carrier, and they fill those holds with corn or soybeans or whatever, and then it's designed to basically go through the locks at the Panama Canal. That's the deal.
Climate respect.
Yeah, climate respect, whatever. So we're starting off with, I guess, a non-story today, but we wanted to kind of just make you guys aware of what was going on. Let's go to price action.
Corn and soybean futures declined yesterday. The December 25 corn contract fell 3 cents to settle near $4.24 per bushel, while the November 25 soybean contract dropped roughly 6 cents to close near $10.38 per bushel. The pullback comes as harvest ramps up with minimal delays expected in the near term. Futures were also pressured as the U.S. dollar strengthened following the Fed's rate cut on Wednesday. Soybean oil futures fell for a second straight session amid uncertainty over biofuel demand. Wheat futures also declined following the downward trend of corn and soybeans.
We're going to use this story as an excuse to have Brian look at the charts for us. Brian, here's a December corn chart. We have not been able to fill that gap at 432 3/4, but we're still holding together.
We are holding together. This is our first test of, I think, very good resistance, whether it's a combination of the high that we had there on July 18th at that 430 1/4. You've got all of those old lows between March and late June. And this would also be a retracement point. About 430 3/4 is the halfway point of the April high to the August low. I think it's as we progress into next week and after talks that we know are going to occur between President Trump and Xi Jinping, I think it's critical that we maintain price action above 420 as we get into next week. That's about where that uptrend off the August low is going to come in. I think if we can hold that uptrend and then get through 430, we should revisit that next downtrend. That's right at about where the 200-day moving average comes in, around 440. However, Mackenzie and I did talk about, if the market does pull back a little bit more from here, I would actually like to see it get about a 15-cent setback from here to revisit that low that was made in mid-July. I think it was at like July 13th or 14th, that 407.5 area. That to me would make a very nice looking head and shoulder bottom that gives us more of a broader base pattern to measure off of and give ourselves some bigger picture outlooks for higher values. And so I would fast forward maybe to the thought process of the March contract. If we could put in that head and shoulder bottom, 450 would be the neckline, and that should measure up to about 485. So again, this is a lot of ifs. I'd like to see a short-term setback, but if we do get positive news out of the weekend here and break through 430 on this particular contract, we should go right to that 200-day and right to that July 3rd high, which is at 442.25.
I wrote earlier this week that perhaps this 430 area has acted as resistance because for a lot of farmers, for some farmers, 430 futures may equal $4 cash.
Yeah.
And maybe that's an interest for some people. Does that make any sense?
Yeah, it does. And basis obviously is different, geographically, but just as a big picture number, right? As you get to that 4.25, 430 area, that does tend to give producers roughly $4 cash. And that's probably one of those things where if you don't have on-farm storage for your bushels, and there's bushels that you have to sell out of the field, getting $4 cash for those bushels and then finding a way to potentially reown it. And I know you don't like reowning, Joe, but I do in certain instances. That might be the play there.
Let's look at soybeans. This just looks really sloppy to me.
It is. It's a sideways range. You could go back a year and we're in the same price area. We're closer to the upper end of the range than we are the lower end of the range. I think that that uptrend between the December low to the April low to these August lows probably comes in the 990-ish area as we get into October. So if we do see a move from the upper end of the range down to the low end of the range, that would be the expected price level to try and test on a downturn. And by and large, we got to make new highs for the year above 1075.75 to bring in what I think would be the strong technical buying. Otherwise, it's range bound.
All right, let's go to export sales.
U.S. corn export sales were strong last week. Net corn sales were reported at 48 million bushels. The print was up 128% from the prior week, with Mexico as the largest buyer for the fourth straight week. Net soybean sales were reported at 34 million bushels. The print was up 71% from the previous week, with Egypt as the largest buyer. Net wheat sales were near the lower end of pre-report expectations at 14 million bushels. The print was up 24% from the previous week, but down 12% from the prior 4-week average. The Philippines were the largest wheat buyer for the week.
All right, let's look at the charts. Corn sales are now the second best of the last 10 years, but very close to a record pace. And we're actually, it's very early, but we're ahead of the pace that's needed to hit USDA projections. Here's soybeans, which are the problem, of course. Worst pace of the last 10 years. I pulled this chart, Brian. This is export sales by country, like the top 10, and China is nowhere to be found at all. I will say this, U.S. soybeans appear to be very competitive on the export market right now.
I was reading that some are looking at how it looks to pencil U.S. soybeans into Brazil.
Why wouldn't you?
And so is this just one of those instances where, yes, China's not buying U.S. soybeans, but generally there's going to be demand displacement. And if China just continues to plow through the Brazilian soybean supplies, then Brazil will come to the U.S. and replenish those supplies.
What I have read, where was I going with this? I lost my train of thought here. What I have read was that U.S. beans are competitive. Other global buyers are going to come to the United States. We haven't been able to make up the difference. And I had a third point I was going to make, and maybe I'll remember when we get to wheat. Wheat sales are great, third best of the last 10 years. Why can't the wheat market get off its ass?
Seems like the narrative is global supply, but man, we're working through a lot of our domestic supply and shipping out of the country. So that's, I think, got to be a positive here. I think this wheat market is working on building a base of lows as well. And I think people might be surprised when this market starts to go up, what type of price levels we could see when it tries to recover.
This is what I was going to say about soybeans. Okay, so I've heard and read that Chinese buyers are covered through September, perhaps through October, but there's still window like November, December into basically when Brazilian harvest begins that they are perhaps still uncovered. So the question, I guess, is are they going to buy? Are there enough beans available in Brazil? And is the shipping all going to work out where they can get covered for those couple of months? Or are they going to risk drawing down their stocks by avoiding U.S. beans?
Right. And I know there are, more vessels than we would typically see this time of year of soybeans from Argentina to China. And there has been talk that China will potentially work through their reserves to avoid buying U.S. soybeans in the short term. But again, that all just comes into play where they're going to have to replenish those reserves down the road at some point.
Yeah. Brazilian government had some numbers out yesterday.
So CONAB is projecting a record Brazilian soybean crop this season, estimating production at 177.7 million metric tons, up 3.6% from last season. Soybean acreage is projected to rise 3.7% to 121.3 million acres, and exports are expected to increase 5.1% to 112.1 million metric tons. The agency also pegged total corn production at 138.3 million metric tons, just 1% below last season, with exports slated to rise 16% to 46.5 million metric tons.
Production estimates, of course, are going to be a function of weather. However, the acreage is probably a lock at this point. 120 million acres plus of soybeans to be harvested in Brazil this year, Brian.
That's incredible. I mean, I remember I was actually talking to my dad. We had coffee yesterday, and I was just telling him about, he asked about the market and tries to understand it. And I said, Dad, when I started doing this, Brazil was only growing 50 some odd million tons of soybeans a year. And, now they're growing 170 some odd million tons. It's incredible the amount of increase in production they've had down there. And one of the problems is that as their soybean acreage grows, then that thereby grows the acreage of their second crop, their safrinha corn that gets planted behind it.
Yeah. USDA's got the crop this year at 175, and CONAB was a little bit higher than that, I think, but that's going to be, again, a function of weather.
The majority of the Corn Belt experienced above normal temperatures and dry conditions last week, and as a result, drought conditions worsened across a large portion of the area. Notably, extreme drought conditions have developed in eastern Ohio and southeastern Missouri. Overall, about 37% of the Corn Belt is experiencing some level of drought, up 17% from last week and 30% higher than 3 months ago. In the high plains, scattered rainfall provided some relief, with drought conditions improving in northeastern North Dakota, southeastern South Dakota, southwestern Kansas, and eastern Kansas. When we look at the percentage of U.S. areas experiencing drought, corn country is at 25%, soybeans 36%, winter wheat 44%, spring wheat 13%, and cattle country 23%.
Drought has really expanded in the central and eastern Corn Belt, or call it even down into the Delta or South Central Corn Belt. We had this graphic from our friends at Crop Profit. This is a little bit different look. Percentage of U.S. corn and soybean counties affected by U.S. drought monitor levels. And you've got a rising number that's in that brown. The brown is what, D1. So it's getting much worse. This has not been a good finish, Brian, for a lot of areas. What are you hearing in terms of yield reports?
There's definitely some good crop out there.
Oh, yeah.
Talked to a producer in North Dakota. His soybeans are phenomenal. He's going to have a good corn crop. But I tell you what, and these are just anecdotal reports, but Southeast Missouri producer had very good corn crop, 232 bushel per acre. He just finished up, but it was 251 last year. So it's not going to be a record for him. Producer in the Northeast pocket of Kansas, across, near the border there, getting 60 bushels less than he should due to rust. Talked to a producer in Greene County, Iowa, that farms some of the surrounding counties, and he's farming. One farm he was on when we talked the other day, should get 260 bushel corn. He's getting 175, so he's 85 off because of rust. So this is one of those situations where it is a lot like last year. We had this late season dryness that definitely is taking the top end off the crop. But we also have that element of the addition of disease pressure that we didn't have last year. Yeah. So I think, we're going to continue to see the overall yield assessments continue to go lower from where we are currently from the USDA's perspective, is my opinion.
The question now, I think, is it still record national yield? Are we still above the 179 and change?
I don't know. I don't know how to handicap that, Joe. I
I don't
mean,
either.
like when especially when you're talking about harvesting 90 million acres.
I know.
But I do have a lot of conversations where I'm hearing the yield is not better than last year's yield.
Yeah.
So I think that does put it into question. And even if it's something closer to trend, 181, that is still a very big difference. And I know people will automatically say, oh, well, the USDA will just come in and reduce demand. And my answer to that is yes, they will, and they did that last January. But there was not a reason for them to. For example, last year they were lower yield in January, a large amount, and then they cut demand, and then after the March quarterly stock report, they have to put that demand back in. So every month they put more export demand back in. So it was more of a procedural thing than, hey, our pace analysis suggests that exports are slow and we should reduce it. And I think the same thing happens. You see the crop get smaller, they'll take demand out of the balance sheet. But just because USDA prints a lower demand number doesn't mean that all of a sudden demand stops.
No.
Price has to do something to ration that demand. And I would argue that last year, $5 corn did not ration export demand. We exported corn the whole way. I think in retrospect, it was the shift in the focus of the market from old crop to what the new crop balance sheet was going to look like as we got into planting and then got into pollination. And we just never had that weather excitement early in the growing cycle. But I don't think I just don't think demand goes away because the USDA says it does. I think you have to have a price mechanism to ration that demand.
Yeah, you're right. It's super early in the marketing year. We're 2 to 3 weeks in the marketing year. USDA's demand adjustments are going to be, as you said, procedural now. You fast forward 4 or 5 months, and they're going to have to start to take into account, pace analysis and ethanol grind and all of those things, rather than just, let's adjust down or adjust up, based on the size of the crop. What did cattle do yesterday?
Cattle futures were higher yesterday. Live cattle were $127 to $172 higher. Feeders saw gains ranging from $247 up to $315. We do have a cattle on feed report coming out here this afternoon. Cattle on feed as of September 1st are estimated to be 99.1% of last year's levels. Placements in August are projected to be 91% compared to last year, and marketings last month are projected to come in at 87.2% versus last year.
Quick cattle market thoughts, Brian?
Yeah, we had some pressure here recently. I think you start taking out the lows that have been made. We've got essentially a sharp low and then a recovery high, and it seems like right now the market's trying to consolidate between those lows and those highs. Pick a direction. Whenever you take out the high, we'll probably go revisit the highs. But if we take out this week's lows, especially the feeder market seems a little bit more unable to get a good recovery, and we're still respecting the downtrend that's been in place on feeders. So I still think there's some potential further downside in these markets.
Outside market's pretty quiet this morning. Brian, thanks for joining us, guys. Have a wonderful weekend. We'll be back on Monday.